All right, what is up, everybody? Welcome to this week's Bitcoin's best trades. In today's stream, we're analyzing Bitcoin using market profile, VWAP, and price action. By the end of the stream, I'll break down the top trades to watch for this week. As always, if you have any questions during the stream, feel free to drop them in the chat. I'll do my best to address all of them once we've completed our analysis on Bitcoin. So, sit tight because we're jumping right in, starting with market profile. As always, I hope everybody's doing well, but let's just dive straight in. TPO. So with TPO right here, we've got some very important developments here, and I'm going to be breaking it down step by step. On the left side of the screen, we've got daily profiles. On the right side of the screen, we've got composites. The main important takeaway here is that we are finding support at a 12-day composite. Now, keep in mind, these are 12 days merged together, and so far, Bitcoin is trying to break below the composite value area high, and it is now trying to reclaim it as support. So based on TPO, I think this is a very important development. What else is important? I think the naked point of control that we have here on the 12-day composite is very important, which is around 67.4K. And then if we're taking a look at a regular daily profile, we can see that the previous time that we formed a 2-day composite was when we formed the initial move upwards. We formed the first day, and then we had that second day, right? When we have a 50% or more value overlap, we can add existing days within the previous day. I did that, which gave me a 2-day composite value area low. And this was the reason why I took the Ethereum short that I posted on Twitter, because we were starting to reject here, and I will show you later on in the stream where, we formed a high volume bar there on Bitcoin, close below the point of control. I took a short on Ethereum because I was long from Bitcoin. I believe it was somewhere from this low, we captured the Ethereum short there, and now we're basically looking what we can expect going forward. I think if Bitcoin is going to be forming a low, it first needs to show us the willingness that, we had a recent 2-day composite similar to this structure right here. We had 1 day, 2 day, this day added within that day gives us a 2-day composite, as we can see right there. If Bitcoin is going to be strong, and if it's going to be showing us the willingness to accept back above 69.2K, that will be the first sign of potential relief. Now, this level lines up with a level of monthly value, which we'll go over in a bit as well. But so far, I think what I would like to see is the anomaly here getting cleaned up. If we can do that and then reclaim a low, then that's a potential first case of we're getting relief for pushing out late shorts. So that's something that I am aware of heading into next week. Now, moving towards VWAP here, and this is where things get really interesting. The first thing is everybody's getting really bearish. Now, I kind of agree that things are not looking too hot right now, but, we'll have to see how this daily develops here. The thing is, we've got yearly developing value high there, which has been capping upside ever since the initial retest there, right? We saw another rejection there. Then we finally got that shift above. Now we're getting that retest around day one support, confluent with the yearly developing value area high. If this is going to be bullish, we really need to see this level hold of support, right? That's one. What happens if we don't really lose this, if we don't really hold this as support? Well, at that point, I think things are going to be looking really ugly, and we could be making way for a retest of this structure and potentially even into VWAP. So, this is on a yearly perspective, because keep in mind, if we're failing to hold this as support, we can just simply state that, hey, this is a deviation. What's the next likely pivot on the yearly value? It's going to be VWAP. To show you a scenario where we had something similar, look at this, right? We broke above yearly value area high, then we saw consolidation, we failed to hold it as support, then we retested it as resistance, which caused this break lower towards yearly VWAP. So whilst I am aware that we're getting some, risking some hedging going into next week, because we've got the elections on Tuesday, we've got FOMC on Thursday, right? We've got the Fed meeting, which is expected to cut rates by a quarter point. So there's a whole lot of things coming up next week. So if there's going to be a de-risking event, I expect it to be within the next couple of days. But still, it will be very important to see how we start to trade around that yearly developing value high. Because if we do not hold the support, that will be bearish on a higher time frame perspective. And at that point, we need to monitor a reaction around VWAP. Moving towards quarterly. Now, within the previous streams, I highlighted the importance of the quarter two value area high, right? It has been capping upside. Then we broke above, and I said, this is a really clean break above. We're forming time and space. If we're going to be getting a retest, it needs to show me that buyers are stepping in, right? And so far, things are not looking too hot, right? I don't like the development here combined with the monthly, which I will show you in a bit. But so far, we're deviating above quarter two value area high. So going forward, this is going to be a very important level. Purely based on quarterly, we are rotational, back within quarterly developing value. Yes, we can use developing value now on the quarter because we've got the second month in, right, within the final quarter. So that's going to be important, which means that quarterly VWAP is going to be an area of interest as well. Monthly right here. And I think arguably this is going to be the most important chart. This is where I'll be basing majority of my trades off going into next week. We have a new previous month value to work with right here. This is the range. Previous month value area high, previous month VWAP, and then right here, the green line is the 30-day rolling VWAP. Now, before I show you the relevance of the 30-day rolling VWAP, take a look at that previous month value area high, right? We are not able to accept back above. And, this is not something that I would like to see, right? For me, going forward, if I want to be bullish Bitcoin on the higher time frames, we really need to see that break back above 70K. Now, that would line up with a break back above the yearly developing value area high, right? Means that we're trading back above quarter two value area high. So all in all, I think 70K is going to be a sticky point. Get back above that. Also lines up with an H12 block that we have right there. I mean, that will be your high time frame shift in structure to that long towards these highs. But so far, not really liking the development. But that being said, right, we've got a whole lot of doom posting here based on VWAP. Let's take a look at the 30-day rolling VWAP. Now, right here, we've got the H12 time frame with the 30-day rolling VWAP, which is this line, right? We can see that the moment we start to break above, so let me just zoom in a bit more for you guys. The moment we start to break above, it has been support. Yes, we saw a slight deviation here, right? But we're getting back above, retested it. So essentially, the way that I like to use the 30-day rolling VWAP is during a bracketing environment, during a range-bound environment, it's ass, right? I don't really like to use it. But if we're trending, then this is going to be a great location to start to look for a potential reversion. Because if Bitcoin is bullish, I need to see the 30-day rolling VWAP hold of support. Because the moment that it doesn't, indicates to me that there's a shift in structure right there. Let's say that we start trading below and we auction back above and we fail to hold it as support and we get a nasty rejection, then that's your sign that there's a shift in condition where we go from an imbalanced up market towards an imbalanced down market. And at that point, that's definitely a bearish development. So whilst we're still trading at support, and while, I think if we're taking a look at the daily time frame, right, purely based on price action, we've got a nice beefy down close candle here, daily support. We could even do it like this, right, where you got this daily down close candle here before we broke structure. It is a 30-day rolling VWAP there as well. If there's going to be a low, this really needs to hold a support. If it doesn't, right, I think we're cooked and we're going to go towards previous quarterly value high around 64.2K at least, all right, because this isn't even accounting for that shift within yearly value. Now, if we're taking everything that we've just discussed, right? We said that, moving back real quick, TPO is trading at the 12-day composite right there. Based on the single daily profile chart, right? We've got a 2-day composite. We've got another 2-day composite. Right now, we've got a single day trading here, and then we have a naked point of control. This is clearly showing us that value is migrating lower, right? Value is migrating lower. That's not bullish. However, we're coming into a 12-day composite with a naked point of control around 67.4. If there's going to be one final drive lower, I need to see buyer stepping in there and then a reclaim around that previous low. Now, this 2-day composite value area low is actually confluent with the quarter two value area high. So I would say If we're sweeping lows and then we get back above 69.2, you know, that's likely going to be the bottoming structure that we're going to be getting. And then we're getting that rally higher. So that's one thing, yeah? Moving towards VWAP again. The yearly is not looking too sexy, right? I need the yearly to start closing above developing value area high ASAP. Because if we're not really closing above, I can see a rotation back towards VWAP, and that's on a higher time frame chart, right? So whilst we're not taking this right now, I am aware that, you know, if this ends up being a deviation, we're likely revisiting VWAP. The quarterly, acceptance back within quarterly value, right? We're aware of that. We filled in this gap here. We are trading back below previous quarterly value area high. This is the level that is confluent with that 2-day composite value area low, right? So should we get back above that, I think there's a decent chance that we're seeing a low being formed. And then at that point, we're going back towards the highs. That brings me towards the monthly, essentially lining up with that Q2 value area high in the 2-day composite that we have right here. And this is why I think 70K, which is the upper half of all of the structures, previous month value area high around 70K, that's going to be my bearish line in the sand going forward. If Bitcoin is bullish and it can show me that we're trading back above 70K, I think this is the sign. If you're, let's say that you're not really comfortable with the trades that I'll show you in a bit, let's, you know, just wait until we're getting acceptance back above 70K. Because if we don't, we're likely to revisit previous month VWAP and then potentially lower into that 62K. Because let's be honest, these lows here, these stack lows are just horrific, right? I'm not a big fan of that. We've got a flat open as well. You know, so it would be typical Bitcoin to get, you know, one big flush lower, but we'll see. Is that clear, by the way, so far? If I'm putting everything that we've just discussed and I'll put it on a regular chart. And let's have a look at the H2. Right here, we can see that daily support. Let's get rid of that. Let's zoom in a bit more. And then we have the 2-day composite value area low to the tick, right? We auctioned higher, rejected there, and then we started to trade lower. This is what I based the Ethereum short on. Now, right here, we've got previous month value area high around 69.6K. This is going to be my bearish line in the sand going forward. That means that even if Bitcoin spikes the low into the naked point of control, reclaims it, and then starts auctioning higher, I still need to see a break above. Because if we do this, spike the highs, and then reject and get back below the previous month value area high, well, then that's a short for me, right? Potentially going lower again, because on the quarterly and the yearly, it is telling me it's bearish. And, you know, even though that the monthly might tell us that, you know, we're you know, trying to break back above previous month value, or, you know, we're finding support at 30-day rolling VWAP, while that is a good short-term rotation, higher time frame tells us as long as we're trading below 69.6, we need to have a bearish bias against this level. I don't care what our favorite influencers are saying, that this is usually the best performing quarter, yada, yada, yada. Sure, that can still be, but we still need to start reclaiming that 69.6K pivot, right? Until then, I'm going to be having a slightly bearish stance here against that yearly value. So that leaves me with the trades heading into next week. Now, what would be the trade that I'm interested in? Well, first off, right here, this was that picture perfect trade, right? If we take a look at Coinbase, we've got a 2-day composite value area low around 71.6. Then we had a high volume rejection bar, point of control at the high. This was your short trigger for a potential move lower. Even if you miss this initial rejection there, the moment we start closing below the high volume point of control there on this candle, that's a short with your invalidation above the high, because that means we're cleaning up a whole bunch of highs here into a key contextual level, and we're likely getting that flush lower. That's what we got. Back into the previous week value area low, which is the upcoming previous week value area low. So in terms of trades, what I want to see is Bitcoin is now forming a typical, in my opinion, a 3-drive structure, where we form the initial low. This is the first drive. Then we're getting the second drive here. So let's see if we are going to form that third and final drive here into the naked point of control. And then what I want to see is, I want to see this right there. So if it can show me a high volume bar with a point of control of the lows, then close back above that previous low. Even if you don't have the indicator, I want to see a sweep, reclaim of the low, because these highs, like this is just pending liquidity in my opinion, right? Everybody's going to be trading their invalidation from that high towards that high, and eventually Bitcoin is going to be putting in a low, and then we're getting a big spike upwards, taking out all of these highs. Whether that's going to be continuation higher towards all-time high, we'll have to see. But so far, this is the long setup that I'm looking to play. Is that clear? Let me know in the chat. And besides this, there is no trade for me on Bitcoin, because the 12-day composite value highs are relatively old. The naked point of control is an anomaly, so we definitely have a reason to go lower. And right here, we've got the 30-day rolling VWAP as well. So let's see how we react. Let's quickly pick up Ethereum, because I'm still short. I mean, this rejection at the previous month value high is so super clean. Let's take a look at the daily. And this is what worries me. If I'm taking, let's get rid of all of these drawings real quick. Ethereum looks so garbage, and let's get rid of that. If I would trade this on, you know, maybe let's just do this as a range, right? Range high, range low. Now that's a nasty rejection with a whole lot of pending lows below. So, you know, I think Ethereum wants to sweep the lows. And if it does, then it will be very important to see the reaction that we're getting there. But so far, it's looking really weak. 69,420 is a great question. So 69,420, I'm still using that level. However, the reason why I have removed it from my charts, otherwise I'm getting too many time frames here on my chart. But 69,420 is now fine-tuned towards the previous month value high, because this is a recent level, right? The previous month value high closed like 3 days ago, right? So this level is almost identical to the 5-month value high around 69,420. It's 140 points higher, or what is it? So I'm going to be using this. That does not mean that it's not relevant, but I've just removed it from the charts and fine-tuned it towards the previous month value high. Let's quickly go over the chat. How do you make those horizontal lines like that? I'm just doing it manually. So for me, I've got an indicator that plots the VWAP pivots. So let's say that I want to outline quarterly value high. I just put a line on it, and then I manually add it because that has my preference. But you know, we've got an indicator for it as well. Bitcoin stocks priced in 5 Trump, and they will go on 10-year pricing in something different, like a mixed outcome. Even if you get Trump as the president. Yeah, I mean, it's going to be a whole lot of fuckery for sure. Like I saw a post from a friend that says, you know, with the previous elections, we had like a 6% nuke from the highs. That's basically what we're seeing right now as well. But I think no matter the outcome, whether it's going to be Trump or Kamala, like, I'm not going to be mixing myself into those political discussions, but I think there's going to be de-risking as soon as we get the announcement. And then, you know, let's say that we spike up and then reject, well, then that will be a short. What's the difference of VWAP value high, market profile value high? So for me personally, market profile value high is based on time. So these are time-based rotations, whilst VWAP are volume-weighted rotations. That's my own personal preference. So to quickly go over it once again, guys, the trades that I'm looking for are, and after that we can conclude it and do some Q&A. So the trade, not this low. The trades that I'll be looking at are sweep this low into the naked point of control, then a high volume bar, reclaim the low. Then that would set up a good long. Let me just switch towards the 30-minute time frame real quick. Right, because we've got pending liquidity, pending liquidity, pending liquidity. We've got the first drive, second drive. Let's say that we do the third drive. I don't know how low this is going to go. However, I do know that we do have a naked point of control there. If we're sweeping the low and then reclaim it, then I think it makes way for a move towards the highs. If we don't get this, then I will not take a long trade. I will also do not force a shorting opportunity here, because in my opinion, the only good short is around previous month value high after we're cleaning up all of these inefficiencies. So trade number 1 there. Trade number 2, if we sweep the lows and then we're spiking above all of these highs, don't get overly bullish, right? We still need to see genuine acceptance above previous month value high. If not, and we start trading back below, right, that means that we're getting another deviation. This is the short, and I'm targeting the lows again, right? So those are the 2 main trades. Are we all clear on that? So my average trade frequency, it really depends. But I'll be honest, like I used to trade really lower time frames, and right now I've pivoted more towards the 30-minute time frame, hourly, 4-hour. But that's mainly because I'm a father of 2, and I don't necessarily have the time anymore to be, chart or trading a tick chart, for example, right? So I prefer to have a bit more of a lean back approach. So that's why you'll see me putting out these horizontals, because what I'll do is I'll just simply plot. For example, right here, I had an alert set. So let's set an alert crossing up once per minute, right? And then I'll say short it. And I'll just go about my day. I do stuff for the group. I do, indicators, the CLI or whatever. And then an alert goes off, and then I'll know what to look for. So I'll take a look at Coinbase, Binance Perps, Exo charts in general, what the flow is doing. And then once I see what I like, I'll just take the short. And that's it. And it depends on the frequency, on how many times a week do we trade the key contextual levels. I don't necessarily like to trade noise like that. So you will never see me trade during the weekend. That's one. I will trade like a regular, I will try and treat it like a regular day, because mainly because of my family. Like if I'm going to be trading from or sitting behind the desk from, let's say that I wave my wife goodbye, she goes to work, I take my kids to school, then I start analyzing the charts, doing my daily prep like I did with you guys right now. Then I know what I want to be trading. But that does not mean that if it's dinner time, like if it's 6 p.m. my time, then my phone goes away. Like that's it. That's done. Like I might have some alerts set just in case, but 99% I'm not going to be trading anymore. Otherwise it pulls me in, right? And I need to have like that separation between family and work. But that's mainly because I'm a father of 2. So depends on who you are or what you want to achieve. Do you think trading pure price action is stupid? No, 100% not. It's a matter of preference. Like I can trade like a regular chart. Like we've broken this down into VWAP. But if I were to do this on this chart, and let's say that I'm going to be breaking this down. Let's get rid of all of the indicators. So starting off with weekly right here. Let's say that let's go about the ICT concepts, because I know majority of you guys know that. What do we have here? We've got a weekly rejection block. Let's annotate that. Weekly rejection block. And I'll show you how simple it is. So weekly rejection block, right? Then usually what I do is I move towards a 2-day chart. And then I'll mark out right here. We've got a different color. 2-day OB. All right. Moving towards the daily chart. That daily chart, 2-day chart, can be refined to that chart. And that means we've got a daily OB like that. Then we're moving towards an H12 chart. Do we have anything? So in this case, right, we had a H12 up close candle. We had a fair value gap from this low towards that high. So within this candle, we filled in the inefficiency before heading lower into daily support. Daily support can be fine-tuned even more, in my opinion, towards this H12 mitigation right there. Up close candle before we took out the lows, structural break, right? And now we're moving upwards. So as you can see, I prefer to trade using VWAP because I think it helps me fine-tune the intraday levels a bit more. Because, I'm not a big fan of putting an entry there around 68K and having a stop around 65 because, a stop loss of 3K, I know some people who like to trade like that. And it's not wrong by any means, but I like to fine tune it a bit more. So whatever you want to do, like, let's see how we go here. Look at this, right? Down close candle, took out a bunch of highs, cleanly broke below, bearish breaker, retested to the tick, right? There we go, equal lows. So no, I certainly do not think that trading price action on its own isn't going to be working, because I've done that like for a long period of time, like since 2016. And then later down the line, I pivoted towards VWAP because it helps me. Like, the only issue I have with price action alone is with VWAP using a 4 structural chart. It's like easier for me to determine, all right, yearly time frame, bearish, bullish, quarterly time frame, bearish, monthly is bearish, right? Bearish invalidation above 70K. And when I'm trading price action on its own, I'm like, well, you know, we've got support there, resistance here. It's also a bit of a dissonance most of the time for me. So, you know, fee tricks, if people tell you it's stupid, tell them to, you know, do one, because it's definitely not stupid. Whatever rocks your boat. If you're comfortable with it, trade it. If not, then use something else. But trading is all about pattern recognition. For me, I'm using this because for me, it's easy to recognize certain patterns within VWAP or order flow and so on. And by the end of the day, it's like, that's the thing with trading, right? You need to recognize certain patterns because they're repetitive, and that's how we make our money. Do you have a course that teaches your method of... yeah, I actually do. Now you don't see me shilling it a whole lot, but you can go to this website, and that's basically an explainer of what we do and what we offer within the group, and the courses that you get within the group and the tools. So you can either opt to get, buy a subscription, or if you're comfortable with it, you can also link your Bybit account to it. And that, if you're trading a certain volume, the link is in the description below. You can just link your account and then you'll have access for free. So whatever your own preference is regarding that. Is it better to use value area of a VWAP or market profile? So that's a great question. For me personally, I'm trading TPO, market profile, and I'm mainly, you will not see me trade a previous day value. I don't necessarily like to trade that, but that's my own preference. What I like to do is I like to merge profiles together. For example, this 12-day composite. Now, I have found that for me personally, having a time-based calculation for my TPO profiles works better when merging value. That means if I'm setting this towards a volume-based, the interactions aren't as clean. For example, right here, right? This is the time-based 2-day composite. Look at the interaction, right? Super clean. That's why I prefer to have time-based on TPO. However, I'm also aware of volume-based on VWAP. So I don't have a preference. I just use time-based for TPO for my composites, and then volume for my VWAP bands. Yo, what's up, Grant? Hope you're well, man. What advice would you give to your semi-advanced self that hasn't reached profitability yet? Stop looking at the lower time frames and treat it as a business. Because I used to be this, where, and I think majority of you guys can, find yourself at it. If we're auctioning, no, not if we're auctioning, but let's say that we have a good week. You write down your daily prep, you do everything that you should be doing in terms of trading, and your equity curve starts going up. At one point, I would know from my daily prep that I shouldn't be trading today because I had no levels of interest. However, I wanted to get that feel, right? Because let's be honest, this is highly addictive. So I would start to take shitty trades, and my P&L will go up, and then I would take a shitty trade because I knew I shouldn't be trading anyway. And then at this point, I was like, well, fuck, I need to go back towards that high of my P&L. Let's take another shitty trade, but let's increase the risk. And that will result in another loss, and then another loss, and then a whole week of good trading got basically wiped out because I got cocky and thought, I'm doing well. Let's just let's just be like, oh, I'll just take a short here, or I'll just take a long there. Fuck it, I've got enough buffer. And that's, why, my profits from the entire week usually got washed out. So I would say treat it as a business. When friends come to me and say, how do you know when you're taking a trade, when you're taking the right trade? Sure, we've got variance. So even if I'm taking this, let's say that we sweep this low, we form a high volume bar there, and then we start to close above that low, right? This is a good trade. But with variance in the market, we can still, still sweep the lows once more and take me out. Shit happens. That's why, the only thing that for certain with trading is that we can adjust our risk according to those trades. So that's one thing. The second thing is, I always tell my friends, if your parents would ask you, here's $1,000, can you trade that for me? And let's say that you do it. I'm not advising you to do it, but let's say that you do it. With every trade, I used to ask myself, right now it's just repetitive, right? It's just a human nature, or not human nature. I don't know how to say that, but right now it's just, I'm accustomed to it, what I'm doing. But previously, when I wasn't really doing well at the beginning, I would start to write down when I wanted to trade. Would I be able to look my friends or whoever lent me the money, to look them in the eye and say, I tried to take a trading setup. All my parameters were right, but I just lost a trade. If the answer would have been no, then I wouldn't take that trade. So, that's my advice for my previous self, to just trust in the process, start small, and do your daily preps. Don't just wake up, have a coffee, and then instantly start trading. No, do your daily prep. Know where and when you want to trade. Know what your trigger is, and then just go with your system. It depends on where I'm at, low techs, in terms of if I let my trades run towards the stop. Let's say with the previous, let's go back. For example, the short. The thought process behind this short was, we're filling in the gap. We had a high volume bar, point of control sticking out like a sore thumb. We closed below here, right? So if I took this short and I had my hard stop above the high, would I wait until we started to close above the point of control? No. Because if I am right, the point of control should hold as resistance. The positioning within the high volume bar should be dynamic resistance for continuation lower. Same story here. Let's say that you longed this, right? It would have been a shit trade, but the point of control is here. The moment you see a close below that point of control indicates something's not right, and you're likely to get stopped out, right? And that's when we're getting that deeper flush lower. So no, I don't usually wait until my full stop gets triggered. I tend to scale out when I see an invalidation. And for me, that invalidation is usually when we're getting a 30-minute candle close above the or below the positioning that was my initial trigger to get into a long or a short. Yeah, I mean, like Grant said, elections, just don't trade it, to be honest. Like, I'll have my levels of interest, but you're better off just waiting. What values do you prefer to use? I found that mostly previous month quarterly. There's not a lot of points to use. Yeah, sure. That's a great question. And that's why I said at the beginning of the stream. So for example, here on the quarterly, we're trading deeper within quarterly value. And right on the right side or on the left side, right, we don't previous quarterlies all the way down here. That is why I'm always looking towards the left side. And that's, if we're having like quarter two value area high, look at the interactions. It is still super relevant. So if we don't have anything to use, I'm going to be looking left, right? And that's when I start using all the levels. However, keep in mind, recency is key. So this previous quarterly value is more important than that previous quarterly value, right? That's very important to understand. Do you ever think about what you'll do if your edge somehow disappears or stops working? Well, I think trading isn't about, finding something and then thinking, well, this is working for me all the time, because flows are changing with the exchanges. Bybit used to be super clean in terms of traps, in terms of order flow. That definitely has changed. So I think it's always important to start backtesting, trying out new things, to continue to thrive with the ever-changing market dynamics. Because, there's just different types of market activity, like trending environment, bracketing environment, liquid, illiquid. And, I think I'm not that concerned with losing edge. It's more like, being able to find the time to continuously to find new things within the market. What could be interesting, right? Being able to find the leading things or being able to find anomalies. So there's people who are, devoting a whole lot more time to that than me. And, I think that's just a personal approach. I think it's good to understand that you will always need to be chasing for that next best thing, in my opinion. Jonathan, if that makes sense. Do you agree that acceptance into the 12-day composite means more downside? Yes, sir. Yes, sir, because let's crack this. And keep in mind, guys, and this is what I want to say, like this wick here is an acceptance, right? Acceptance is when we're getting time and space and then try to break above and then fail to do so. That's acceptance. So don't be chasing this down here. Wait for a time and space. Be patient. Yes, we can check the weekly. Let me just check the weekly real quick. And I mean, we're coming off, and this is what I meant, right? Let's take a look here. High volume POC, retested it. Previous week value area high there. Let's see if we're getting some upside towards the developing value area low. Right? Swept the low. Previous week value area high. High volume point of control there. Retest it to the tick. So this is what the weekly looks like. Alt plus enter might help you to zoom in when you're using 4-hour chart screen. Oh, really? Then what does it do? Oh shit, nice. It locks it. Maybe I just need to do this. So yeah. Also, there's a 2-hour OB above in line with the naked point of control, which is decent for a short. Yes, I like that as well. You're referring to the naked point of control up here, I think, or not? Oh, the 4 screens. Oh, shit. I wasn't aware of that, man. That's a... Ooh. Okay. Okay, so I've got a new tool to work with. Damn, thank you, man. Appreciate that. I used to deal with this. But, I like this as well because it helps me annotate it. But that's a great tip. Thank you. We have a 2-week composite in October. Do you take the levels into considerations? Yes, sir. That's a great suggestion. You're referring to this one. Undo all merges. Yes, this one. I definitely take it into consideration. However, that value area high is roughly around the levels that we have from VWAP and the current daily composite. So that is why I haven't taken it into consideration during the stream, because otherwise we're getting too many pivots. But it's basically in line with that 2-day value area low here, right? This structure right there. So, we got a single print gap there. Get back above here, then we'll see what happens next. But that's definitely a good take. Around 69.4. Oh, 69.4. All right. Yeah, this component control. 69.4. What else is in confluence with 69.4? 69. Previous 69.4. Yeah, I think that could be a good short, but at that point, I would prefer, a bit of a deeper push into previous month value high. I think that's better. See me gap at 67. Nice. All right. Lining up with the naked point of control as well. See, so that's good, right? Everybody has their own, you know, things that they like to be trading, and it lines up with everything. So, anyways, I think that's it. So this is going to be the Bitcoin stream. Now, later on down the line, I'm going to be, not later down the line, but this week, I'm going to be adding a altcoin stream as well. I will notify you guys. It's probably going to be on, we'll see, because on Tuesday is the election. So that's probably going to be on Wednesday. So the streaming schedule from this point on is going to be Bitcoin streams on Sunday, altcoin streams on Wednesday, and then I'm going to be putting out a weekly video with an update from this Sunday stream as well. And that's going to be put into a, you know, a nice little format that's easy to, you know, to quickly peek it. Oh, and oh yeah, tell people to like. So guys, leave me a like. Please leave me a like on today's stream because it helps me tremendously. What also helps me is if you put something nice in the comments, like, you know, I know everybody does not really have the time to do it, but it helps me push out the content in the algorithm of YouTube. So, you know, that's highly appreciated. Thank you all. And, you know, I will see you guys in the next one. Take care. Have a fantastic Sunday. See ya.